Hello everyone, today is Friday, June 16th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly presented by the Trade Risk, where we break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. I'm a little bit pressed for time today. I didn't do a top 5 slide and intro here. We're going to just jump right into some of the charts, the data points, but really the big story was the Fed this week, and we did get a pause, so we did not get a rate hike this week, but we did get some indication that there is agreement that we will have 2 more rate hikes this year. And I think there's only 4 meetings left throughout the rest of 2023. So that's quite interesting. We don't really know that if the market is totally buying that at this time, but that at least is what the Fed is trying to impress upon us, is that they are going to stay pretty hawkish and continue on this rate hiking path. So nevertheless, let's take a look at the numbers here. And if we start in the top left, follow my mouse, we've got green across the board here. 1 week performance. Take a look at this. Nasdaq just back to marching, racing higher, 3.85%, followed by the S&P at 2.6%, world stocks at 2.5%, and the Russell 2000 took a bit of a breather here. But if we look at the 1 month numbers, you can see everything's nice and green across the board. Russell 2000 was playing some catch up over the last couple of weeks, but the Nasdaq continues to dominate. Now, in terms of the volatility landscape of everything, you can see that we did basically, kind of move sideways to slightly up, I suppose, in the Nasdaq. So we did have a week of strong gains up in the Nasdaq, and VIX and Nasdaq volatility up as well. So you can see going out at 19.79 into the weekend. The S&P, the VIX, as we all know and love, 13.54, down just slightly this week. So very strong action out there for stocks as the chase continues. When we take a look at our sector grid here, you can see almost every single sector was in the green. So we had technology, materials, and consumer discretionary at the top of the list here, 4 to 3% to the upside. And on the downside, we had energy negative this week, the only sector that was negative. Financials was up 1.3%, utilities up 1.37%, but these were the underperformers. Now, if we do take a look at our new sector grid here, so this is our smart trend filters. And if you are a TC2000 user, you can check this out. You can get this on your own platform here, but it's a simple price and volume sort of smoother way to kind of trend follow and look for turning points. But the interesting spot here is on a daily chart. When we look at our sector grid, so this is all of the spider sector ETFs here. Every single one of them now is printing a green dot here, which basically is just a very simple way to say, hey, things are looking pretty good. Bulls are generally speaking in control of these markets on a daily time frame. This is something we've been talking about for a while, which we started to get in the last couple of weeks as the Russell 2000 came alive, but breadth expansion, more participation in markets, not just 10 stocks moving everything. And we are starting to see, again, just some continuation here, some broadening out of this market rally, and that is continually good to see. Now, again, if we continue to look at market breadth, follow my mouse here down the bottom left. 52-week highs, 52-week lows. Take a look at the spike and the surge, right, and the continuation here of stocks hitting 52-week highs in the NYSE. It continues to dominate now, which is, again, a new trend that we basically started seeing at the start of June when the Russell 2000 really kind of came alive. End of May, beginning of June, we started to see this surge pick up. We still see more stocks trending over the 200 SMA. We see more stocks trending over the 50 SMA. And when we look here on a individual market index level here, take a look at the S&P 500, the percentage of stocks that were up this week, 83%. It's one of the highest here that we've seen. And the Nasdaq 100 at 90%. So we saw, again, even in these, I would still call them market cap concentrated indices. So S&P, of course, only 500 stocks. NDX, Nasdaq 100, only 100 stocks. But 90% of them, 80% of them were moving up this week. And I thought that was pretty interesting. And again, with above average volume, pretty strong week for volume and up just generally here for the market cap weighted indices. So nice to see that there. If we go to commodities on the week here, natural gas, big standout, 15.5%. This thing's all over the place this year, but trying to put in a little bit of a bottom here, medium-term bottom. It's been carving out, kind of in the process of moving a lot more sideways over the past few months, couple months, and nice move there. DBA also up very strongly here. USO oil up 2%. The copper was basically flat this week, and gold, silver, both down slightly. And the dollar index really did roll over a bit, though, 1.16%. So probably one of the biggest moves that we've seen down for the dollar in quite some time. And if we do look at the dollar up here, take a look at our smart trend filter applied to it. First red dot being printed here for the dollar, going all the way back to early May, beginning of May. So this is the first time we're finally starting to see more kind of consistent rollover and break of trend here over the past month or so. Now, if we take a look at treasury yields, generally speaking, it was kind of a mixed week. We did see yields kind of jump up a little bit on the short end. We saw more inversion out there. So the long end of the curve kind of went down a little bit, and the short end popped up. So we're getting more of that kind of tends to, or, you could look at a handful of different crosses, but we are steepening again. We are getting more inverted here. And that is obviously, at least, well, I shouldn't say it's obvious, because the market does not really care about it all that much, at least equity markets right now, but certainly some warning signs continue to print here in terms of the yield curve. Now, if we start to take a look at some price action here again this week, this is a weekly candlestick chart here of the S&P 500, and you can see that we just got a clear break out of this range here and above all of the recent highs going back to April of 2022. So we have cleared above all of those big relevant levels that we've been tracking and tracing going through this bear market, and the next big level that the S&P has way in front of it and way about 6% above, 4% above, I guess, at this price, 4,600. That would be the next big spot. That's where we essentially double top rolled over in early February and March of 2022. That was the last time we were up there. For now, market seems to be in this pretty steeply sloped uptrend. We did pull back a little bit on Friday. It was OPEX day here, and we are still holding above this trend. We're holding above 4,300. So life looks good for the bulls. It's definitely a chase. It's not an easy add-on exposure right now. Things are definitely a lot more frothy. There's more bullish sentiment readings out there. A lot more people getting comfortable taking risk, expanding the portfolio. Those all give you slight sort of contrarian warning signs, but the trend is up, and the squeeze is still very much in motion here. So depending on your time frame, you're either looking at this more steep kind of trend line to measure and manage risk against. If you're a little bit longer term, maybe you're just looking at this 4,300 area as a good line in the sand, saying, look, I want to be long S&P. I want to be long, the U.S. markets here. If we can stay above 4,300 in the S&P, it's another way you could sort of risk manage and participate in this rally, but not just get carried away with blind exposure here. Okay, so that's the S&P 500. If we go to the Nasdaq 100, take a look at this, rejecting and reversing right up here at the old March highs here and the early 2022 highs. So this is basically the spot that we just identified there for the S&P 500 in terms of the time frame. This was back in February, March. The difference is the S&P hasn't got back up to these prior levels, whereas when we go to the NDX, you can see that we've already made a full run to that early January kind of double top rollover spot. And so you can see that the NDX essentially, pushed right up into it and then reversed and closed a little bit lower, heavier volume today. Again, it was an OPEX session. We are very stretched, but the music continues here, right? So the slopes have been getting a little bit steeper here as this rally has continued on. More people believing in it, more sort of zero DTE options pushing this market higher, and some real buying too. I don't want to dismiss potentially the real buyers coming in here, and some short squeezes, all of that wonderful stuff kind of fueling us here. But I do want to just take a quick step back. Here's a monthly chart on the Nasdaq 100 right now. Or you could even look at, even just a weekly chart starts to illustrate this a enough is, we have had some really good times here over the past 2 months now. It's been, taken some time for sentiment to shift, right? It seemed like everybody wanted to hate the rally, over here. And now we're starting to get more and more people believing it. That's, of course, what price does. As price goes higher, you get more people believing it and feeling good. But we've had a really, really nice run here for the Nasdaq for the first half of this year. So moving into some of these bigger technical spots back from early 2022, this is a very, very reasonable spot for the market to at least take a pause. It doesn't have to totally roll over. We don't have to enter, a big, cascading, liquidity falling market again. But even if it just breathed and went sideways here, June, seasonally, not a very strong month for markets. And so, if we take a pause here, maybe check all the way back to 14,000, but do it in a healthy way, I think that would be very, very much, constructive, frankly, for this market. So we'll see what happens. But for now, NDX very, very strong. And last but not least, if we go to the Russell 2000, so on the week here, you can see it didn't quite get too much more forward progress. It had 2 big weeks. So we had up 3.3% week, followed by a up 1.65%. We added a little bit there, but you can see that nice big tail up here. We're still range bound in the Russell 2000. We're still kind of in the worst shape here in the Russell 2000. Jury's still out on, which way this ends up resolving itself. But, bulls are at least trying to keep that upward momentum going for now. So that's kind of what we've got in front of us. So a couple of other standouts here, a couple of things I wanted to mention. So USO, so we've been talking about USO a little bit here, and you can see it's still very much in this channel, but still, starting to shape up a little bit. Dollar rolling over certainly does help commodities. So that's going on right now. Speaking of the dollar, here it is, UUP. You can see a nice little rollover here. It's still in a weird kind of complicated formation going on a weekly chart. You can clean it up and you can see mostly sideways, kind of just trending sideways, maybe putting in some type of base here, but certainly in pullback mode. We'll see if dip buyers step in for that. If we take a look at gold, you can see also just moving sideways here. Hasn't quite broken down, hasn't quite got the strength to move back up. It's just kind of buying some time a little over this 180 zone here, and we're still waiting to see which way this consolidation ends up resolving. Keep an eye on that though. Lots of good compression there, and something to pay attention to next week. So that, I think, is everything I wanted to say on the big majors. I did want to just look at Qs here again on our rolling returns layout. So this is a layout we have built for TC2000. Again, if you're a user, you can get this on our website. But rolling returns here. So this is measuring, in this case now, 21-week rolling returns. I'm on a weekly time frame. And then I think this is just kind of interesting when you zoom out here and you just look at how good these these times are. Then from a 21-week rolling perspective, which again is a relative, throwing a dart in terms of look back period. So you could change this to whatever you see fit. But I think the point just illustrates going all the way back to 2009. This is essentially the best 21-week rolling period that we've seen since 2020, when we had that big run up after the initial COVID shock. This is the strongest period that we've seen if you take that out, or just right behind it. And, you can look at various look back periods. The point is times have been good, and it's just something to remember and measure and map that as we continue to go forward. It's tough to keep this pace for a very long period of time. So just keep that in mind. Now, last but not least, strongest and weakest stocks. I just wanted to take a quick peek here. It's another layout of ours that we've built, but we're just looking at strongest technology stocks right now. Intel at a very, very top of the list here is up 16% this week. So again, very strong move out there in Intel semiconductors. I actually think our short-term trading system got short Intel today, if I'm not mistaken. I have to look that up. I think it did. It's a counter-trend trading system, very short-term. It's more for a professional system, so be careful there. Lots of risk. You have to know how to manage your position size, but I do believe we just established a short position there in Intel. But the technology names, for the big ones here, Oracle up 14% this week. Look at that volume that came in. HPE 11%, big volume coming in here in Hewlett Packard. And then good old NVIDIA just romping, stomping, still making new all-time highs. Pulled back a bit on Friday, but 426 print, up 10% this week. And we're, north of $1 trillion market cap here. So times have been really good here for technology stocks. And, we go right down the list at some of these other sectors that have been doing well recently. But, the point is breadth is expanding. It's not just technology, but we are still seeing some very, very big moves going on there. And what I like to do, in some of these periods here, if I go back to this chart, I like to always throw on Bollinger Bands and just get a kind of a pulse check here. So when we're looking at the Qs, for instance, just riding that upper Bollinger Band. If you're looking at NVIDIA, I guess this one had a huge move, so they're still kind of expanding and playing some catch up, but Intel kind of riding the top. So it's always interesting just to get a relative measure there of volatility and kind of where that trend is. So that, I think, covers everything. If we want to take a look really quick at what else? Industries that are moving this week. I'll just expand this list here. So this is, again, another layout we have for TC2000, but you can just see some of the notable kind of standout sectors and industries that were on the bullish side. And on the downside, there's only one that was really hitting our bear list here. And this is healthcare plans, which was down 5.75%, heavy volume today to multi-month lows. So everything else pretty much on the bull side. So that is it. Moved quick, talked fast, but a little bit pressed for time today. I hope everybody's doing well out there. It is summertime. Weather's getting good. Markets are closed Juneteenth on Monday, so we got markets closed. So got a short week, long weekend. Hope everybody enjoys. As always, let me know your thoughts in the comments below. What are you thinking about this market? Still participating? Rally broadening out enough? Where are you finding some opportunity? Love to hear it below in the comments. And I want to thank you. Have a good weekend for tuning in here again. And we'll see you back here next Friday. Take care.